Kirwa is saying is thinking of acquiring a loan from a SACCO at a cost of 1% per month or 12% per annum on a reducing balance basis, and purposes to invest that loan acquired in an infrastructure bond, or for this case, in an investment vehicle that will give him a return of 17% per annum. When you obtain a loan to invest in another product that is giving you a higher return compared to what the loan is charging you as interest, that is what we call arbitraging. To be specific, that is a debt arbitrage or an interest arbitrage. Before we proceed deep into our calculations, I would request you look at this information. This is what happened in 2024 with our banks. When CBK opened the bank's window to borrow from CBK for purposes of emergency, the local banks identified an opportunity because the rate at which the infrastructure bonds and other bonds were paying was higher compared to the interest that CBK was charging the banks. And what did the banks do? The banks borrowed heavily from the central bank and returned the money again to invest in the government through the same central bank, attracting huge net returns to the banks. That is interest arbitrage, debt arbitraging. And to measure the extent to which that was done, particularly the infrastructure bonds, banks borrowed and invested in the central bank to a tune of 1 trillion Kenya shillings. That is not inclusive of the amounts that the subsidiaries of the banks, the money market funds and other funds that are operated under the banks invested. If banks can borrow and reinvest to arbitrage, what about me and you? It is possible to borrow and invest in investment vehicles that are giving you a higher return compared to what you are charged as finance cost or interest on the loans that you have acquired for that investment. The most important thing to look at is the cost of that financing vis-a-vis the returns that you are getting from those investments. Before we go into those details, like this video, give us your views and opinions in the comment section, and don't forget to share this video. We shall be looking at the specific calculations with respect to the Kirwa's question after 3 seconds break, so don't go away. Welcome back and thank you for your like, and if you are new to the channel, we will appreciate your subscription to the channel because this channel dedicates to giving you at least 4 value-packed videos on a weekly basis. When you hit the notification button, you are going to be notified by YouTube when we upload a new video. Let's look at Kirwa's option of borrowing from a SACCO. We have taken the trouble to look at what different SACCOs will offer us for a loan repayable in 3 years or 36 months. And our finding, or what we got, was that most SACCOs have this product that is charging a 1% per month or 12% per annum on a reducing balance. And we took a figure of 1 million shillings. And at 12% per annum on a reducing balance basis for 36 months, these are the figures that we got from various SACCOs. From this schedule, a loan of 1 million at 12% per annum for 36 months will charge a total interest of 195,715.15. Before the loan is processed, there are other incidental or direct costs that are related to processing of a loan. When you look at SACCOs, most SACCOs for this type of a loan will charge you a 1% processing fee. That is 1% of the amount of loan that you are applying, but a maximum of 5,000. To be prudent, we took the highest amount that you can pay as processing fee for this particular loan, and that was 5,000. This can be replicated for a loan that is processed from any other financier, maybe a bank, a microfinance, but you have to include the else specific expenses that relate to the loan processing. For instance, if you are using a property or an asset to secure this loan as the collateral, there are incidental costs that relate to that processing. If it is a vehicle logbook, there will be an in-charge fee that will be charged for co-owning the logbook for the period of that loan. If you are using land title deed as collateral, then there are conveyancing fees that will be charged for purposes of charging that instrument. Those expenses would be added to get the total cost that relates to acquiring the loan. For our example of taking a loan as per Kiroa's option from a SACCO will charge you at most the 5,000, that is 1% of the amount that you are applying with a maximum of 5,000. So if you take that 5,000 and the total interest that is charged for this loan of 195,715.15, then we are getting a total loan or total cost of 200,915.15. That would bring the total loan amount, that is the loan plus all the costs, to a 1.2,715.15. Further to that, because you cannot pop into a SACCO and apply for a loan, we have also to look at the other important accounts and the element that will be requirement that will be met by Kiroa in order to be able to qualify for this loan. And for eligibility purpose, for Kiroa to be able to access a loan of 1 million, Kiroa must have been a member of this SACCO for a minimum of 6 months. So for the period that Kiroa was in the SACCO, he must accumulate deposits, what many people call savings, of up to 1/3 because this loan is issued at a frequency of 3 or 3 times the amount that you have accumulated as your deposits. Or let's use the word saving that is understood by many people. So for that, it means then Kiroa will have accumulated a total of about 350,000. On top of that, there is a minimum capital requirement that Kiroa must have by the time of qualifying for this loan, and we are taking an example out of our research from the market of 20,000. This is important because we have to look at the total cost and returns that Kiroa will get from the side of the SACCO, then compare with what Kiroa will be getting from the side of the investment for us to draw a conclusion whether borrowing to invest on the other side is a good idea, is a plausible idea. So for this case, we took the average in the market that the deposits pay a return that you call an interest rebate. And it's important to note why this interest is called a rebate and not just interest like what we get from any other form of investment. The word rebate is a refund where you are believed or felt to have paid more or a lot in terms of interest. So interest rebate in the sense of cooperative societies then means members get refunded a part of what they were paying as interest on the loans. That said, then we took an interest rebate at 10% and dividend rate of 13%, and out of this schedule we have analyzed what Kiroa will be getting from the SACCO over the period of 3 years. The notion here of the reason for doing this analysis, we are trying to demonstrate an analysis to prove that the costs related to this loan can easily be compensated by the returns that Kirwa will be getting from the deposits and the dividends and interest that you'll be getting from the investment from the SACCO. Now, from the schedule, at 10% of the deposits that Kirwa will have accumulated over that period, remember there is a minimum amount of deposit that Kirwa will be putting in or building his deposit account, and therefore the amount of rebate that Kirwa will be getting over the 3 years will be increasing over time as per this schedule. And so is the dividend. But we have assumed the dividend will remain the same for that period, assuming that he will have no need to grow the share capital account beyond the minimum that is required. And for that, from this schedule, we are saying that Kirwa will have accumulated a total of 134,400 from the interest rebates and dividends. That aside, let's look at what Kirwa will get from investing that 1 million shillings in several money market fund accounts. We have picked from the top 5, which are giving us at least 17% per annum as return on our investments. That was, we have Saiton, we have Kuza, we have Lofted Carbon, we have Etika. All those are in the region of 17%. Based on the calculations that are available or the figures that are available, investing 1 million in 3, we have used Ethical, Lofted Carbon, and Kuza as our platforms or investment vehicles of our choice for this analysis, and 1 million in Ethica for the 3 years will yield a total of 1.665093.49 over 3 years. That is giving us a net growth or total interest of 665,093. If the same 1 million was invested in Lofted Carbon, it will give us a net return of 659,342. If it was in Kuza, we will get 530,658. That is the total interest over the period of 3 years. Comparing those returns vis-a-vis what we will be getting from the side of the loan as cost, then obviously that gives you a positive figure and a conclusion that it would work for Kirwa to borrow a loan from the SACCO and invest in the money market fund or in infrastructure bond or even a fixed coupon bond, giving a return of 17%. Further to that analysis, we need to look at the average growth per month. If you are getting, we are picking now the highest return in terms of interest of 665,093, that would give us an average growth of about 18,474 on a monthly basis. Then if you look at what will happen to Kirwa's cash flows at the expiry of the 3 years that he was servicing the loan, assuming that maybe Kirwa is servicing this loan through the payroll or the payslip, and once we are done with the 3 years of repaying the loan, the 34,000 per month that Kirwa was paying through the loan will get back to his payslip. And on top of that, the investment of 1 million in the money market fund, which will have grown to a total of 1.665 million, will start giving Kirwa 23,588 shillings per month. So the patience of 3 years paying that loan, and on the other side an investment of growing after 3 years, if Kirwa will choose to be drawing a salary from the investment or a cash flow from the investment on a regular basis, on a monthly basis, he will be able to get 23,588 every month without touching or preserving, while preserving the total capital that he will have built up to 3 years, or in the period of the 3 years, that is the 1.665 million. But with all that, he will be able to access 23,588.82 every month. That must be a good idea. Debt arbitraging is borrowing and investing at higher returns. Thank you for watching.